Welcome back to Borak Bersama Maybank. Today we are putting the spotlight back on Hong Kong, and joining us is our new Hong Kong Retail Head of Equities Research, Miranda Cheng, who's eager to share her insights on one of this year's best performing markets. Now Miranda, it's been a while since we last checked in on the Hong Kong market. Given how closely it's tied to the Chinese economy, could you start us off with a quick refresher? What's been happening on the ground in China lately?
Of course, let's have a big picture of China's economy right now. So in Q1, we saw the GDP grow 5.4% in real terms, but we have to bear in mind that actually the deflator was still negative. So the economy had its 7th quarter of deflation. As for consumption, it's not bad, and export is not bad. Export soared, but we have to bear in mind of the front-loading effects, because if the tariff is coming, exporters will tend to do the front-loading in April, May, and June, and for July. So we have to bear in mind for that effect. If we are digging into some details of the macro picture, we can see that actually the retail sales is doing better than expected in May, and that is because of the government subsidies policy. So we can see that the household appliances, the communication devices, they are doing quite well, but at the same time, consumer confidence seems edged up, but amid falling unemployment.
All right, so the policies implemented by the Chinese government seems to have been quite effective, with the Hong Kong stock market delivering an impressive year-to-date performance despite ongoing geopolitical tensions. With that in mind, where have the key opportunities within the market emerged so far?
So let's see some structural opportunities emerge despite all the uncertainties, macroeconomic uncertainties, tariff uncertainties. Two directions. Technology and new consumptions are booming. Besides DeepSeek, we can see the dancing robots at Spring Festival Gala also raised global attention, because this is like Chinese-made robots can dance when US robots can only stand or can only walk. This is also a surprise to the whole world. And Chinese leading EV company launched new models with very high-level autopilot, and they are commercialized very quickly. When maybe US EV, they are not even passing the law. So China is implementing, executing something very quickly. So the other main direction will be new consumption. So we observed that there's a change in consumer actions, like the new consumptions are emerged. Consumption is no longer just for practicality. Consumer emphasize some emotional value and connections to the product. So we see some new consumptions like bubble tea drinks like Michelle, like La Bubu, some flushy toys, or maybe Lao Pu, some luxury gold that can show their personality at the same time as safe haven assets. We see some very interesting new consumption trend arise.
Okay, I'm not quite sure what the La Bubu craze is all about, but gold is definitely more my thing. Before we wrap up, what would be your recommended investment approach for gaining exposure to the Hong Kong market?
So for investment strategy, we recommend a barbell approach. We see that the market is very choppy this year. Although we performed so well, the Hong Kong equities and so many sectors performed so well, the sentiment is very volatile. So we recommend, on one hand, we invest in companies with dividend growth potential, strong cash flow, and with the ability to do buybacks or to pay higher dividends. On the other hand, we recommend to invest in companies with structural growth opportunities, like the main two directions I just mentioned, like tech and new consumptions. On one hand, we like some more defensive picks because the market is very choppy. Let's introduce a gold stock, Zijin. They have copper business. They also had a gold business. We think that the export concerns of the copper business might ease up, and the revenue from the company's gold mining business will still thrive, as the inflows of the market sentiment, market volatility will still bolster the performance of gold stock. Valuation-wise, we think that Zijin is attractive given they have announced a spin-off. The last 12-month PE 13.1 times versus 5-year average 17.3 times is currently very attractive and slightly lower than industry median. And another defensive play, we would recommend BOC Hong Kong or Bank of China. Not much difference, just that BOC Hong Kong, they have quarterly payouts, and Bank of China, they pay out half a year. So they're both high dividend yields with around 5.6 to 5.7%, and very good asset, very good quality asset. And both companies continue to increase their dividend payouts. Will continue to benefit from the efficacy of the CSRC to boost shareholders' returns. And the other growth play, we recommend BYD. We believe that BYD will still be the leader of China EV and battery because of their vertical integration in batteries, semiconductors, and lightweight materials leads to significant cost efficiencies. And they are the expert of doing supply chain rewiring amid the tariff tension because they have overseas factories all over the world, such as Vietnam and Indonesia. Valuation-wise, the last 12-month PE trading at 7.9 times, which is very attractive because the 2-year average was at 22 times, and they are more attractive comparing with PS2.
Alright, that's a wrap for today. Aside to the audience, you can catch our latest research report on your Maybank Trade MY app. All you need to do is just head over to the Insights tab and you will be able to find it there. And for those who are looking to trade stocks, structured warrants or futures, you can apply for a CDS or trading account online via the QR code on the screen now. But if you need a personal touch, you can also approach our sales representatives and they can help get you started with a trading account. With that, we'll catch everyone in the next episode. But until then, this is Najib Hussain signing off.